Next up, we have the Executive Chairman of Evolution Mining. ASX code is EVN. To talk to us all things gold and the Evolution Mining story, Jake Klein, welcome to the Virtual Gold Conference. Once again, still locked up, not face-to-face, but maybe at the end of the year, maybe.
Thanks, Kerry, and great to be here from lockdown Sydney. Well done for having this conference. At least it gets people talking about gold.
Thanks, Jake. Well, no better person to talk not just about the Evolution Mining story, but your views on gold and what's going on. But obviously, as I've said right throughout it, and Jake's got it here, Jake, you can tell us, forward-looking statement, don't believe everything he says.
Well said. Let's move on. Let's get on to COVID. I think it's 2 slides back, Kerry, because I don't think I can start a presentation without just talking briefly about COVID.
Sure.
We're obviously still in lockdown. COVID has had a huge impact. Unfortunately for us, it's been limited in terms of real disruption to our business. But if you cast your mind back 12 months ago, the whole world was dealing with a disease that had no cure in sight. Gold went through the roof. It was at record highs. Today, there is a vaccine. It's not readily available in Australia, but we'll talk about that at some other time. But fundamentally, the world seems to be emerging from this pandemic and learning how to live with the pandemic, because that's the only way forward. So, stock markets and property markets are demonstrating that, in their view, the worst is behind us. And we can start looking forward to growth in the economies. And that's what seems to be happening everywhere other than Australia, which is still in this really problematic phase.
How did we stuff it up so badly, Jake?
I think we forgot to order the vaccine.
Well, we've got it now.
Yeah, we have. Then we ordered the wrong one, and we couldn't get our message straight that you could take either. And it was still better than getting COVID. But anyway, we stuffed it up big time. Best snatching of defeat from the jaws of victory that we've ever done as a country.
We'll be out of it soon, do you think, Jake? Back to normal soon? We're never going to eradicate it, as you said, but is it affecting your business?
Gary, we have 6 assets, 5 of them in Australia, 1 of them is in Canada. The only site that we can legally visit at the moment is in Canada. So Bob Fulk, our CEO, and Glenn Masterman, our VP Discovery, are off to Canada next week, because that's the only site that they can go and visit.
Are you serious? You can't go to any other sites in Australia? No,
we are behind the Iron Curtain in Sydney.
Wow, that's crazy. Well, let's hope we go. But you're still managing the business. It's just more problematic.
It is. It's disruptive and it's inconvenient. But by and large, our business has been unaffected by the pandemic, which is a lot more than I can say about the poor coffee shop owner or restaurant in Sydney.
Yeah, and throughout Australia. Yeah, it's a shocker. It's a shocker. But no better person, in my opinion. Seriously. I mean, earlier today we spoke to Rick Rule, who has his views on where we're at, but you've got a big picture view on gold as well. So before we get into the evolution story, I'd love you to give our investor audience your views on where we're at with gold and globally what you think the outcomes are going to be going forward.
Sure. Maybe I should bring up that forward-looking statement again, but
hang on, let's bring it up again. There we go.
it's fine. I think the easiest way to explain it is gold's had a terrible 12 months. 12 months ago, the world was falling apart. Now everything's fine. Property prices and stock market prices are at record highs. Gold has gone down. Stock markets have gone up. And who needs a store of value, because everything else is going to the moon? We'll discuss whether that's reality, but I just ask your viewers to put one fact in context. The US left the gold standard in 1971, so it's 50 years from then. US debt has gone up, national debt has gone up 70 times since then, and the gold price has gone up 50 times. So
Yeah.
gold has had a lousy 12 months in terms of share price performance, as has it had evolution. It did come off record highs. We were at an historic high 12 months ago, but gold will have its day again, because when everything's perfectly priced, that's kind of when sometimes you need to think about having some insurance, and gold is the best insurance you can possibly have.
Yeah, I would agree with that. But as you said, there's a lot of money, what I call the funny money, being printed at the moment.
Well, I think this again is what investors seem to be missing, in that, there is so much monetary and fiscal stimulus being thrown at the problem, that how is the world going to get out of this is the question that's got to be answered. And it's very difficult to understand how massive inflation isn't going to come through with the amount of money that's being thrown at it. Interest rates, when Evolution just did some 10-year debt, we borrowed money at just over 3%. That's phenomenally cheap money for a gold company. At some point in time, either inflation, which everyone's now calling transient, is going to not prove to be transient, and interest rates are going to have to go up. Gold is the ultimate store of value, and I think you can rely on the Fed ensuring that they don't react quickly enough. They're still talking about, they're talking about tapering, but tapering is just reducing the amount of monetary stimulus. This is a party that is going to end in tears, and when that ends, gold is going to be one of the assets you want to own. So I'm not suggesting that people go out and sell all their property and sell all their shares. I'm just saying that when markets are perfectly priced, or priced for perfection, that's a time when you should have a 5-10% of your portfolio in gold and gold exposure. And I'm going to try and convince you to make that exposure in Evolution. But that I would just encourage every investor to have some of their portfolio in gold.
Yeah, and I think that's really good advice. As we've said in the past, don't sell your house and your children, as Jake said. Well, you didn't talk about children, did say the house, to go all in gold. You wouldn't do that, but it's diversification. And as Jake just said, it's insurance. You don't want the gold price to go through the stratosphere, but if it did, you'd want to have some exposure to it. And so let's just take a look at the Evolution story, and your market cap is rather big these days.
It is. It was bigger last year, but it is big, $7 billion. I think the thing which I'm proudest of is that we haven't lost our core strategy and our values, and we'll talk through that in a few minutes. But fundamentally, we're a company that wants to prosper through the cycle. We recognize, as we've just talked about, in the short term, gold price is going to be up and down. Longer term, it's definitely going up. So we want to position our portfolio as low cost, high quality portfolio, one that will prosper through the cycle. And I'm very proud that today we've announced that we're paying our 17th consecutive dividend. So that's pretty amazing, I think, for a gold company to be paying 17 consecutive companies in dividends. And it's reflective of the strategy that has been to position ourselves as at low cost, long life assets. And to me, that's the only way you should be as a gold company.
When you mention that, and by the way, congratulations, it's the 17th dividend you paid out. What was the driver behind continuing those dividend payments for shareholders?
Because you should be able to make money through the cycle. And our job is, the investor's job is to take a view on the gold price. I've tried to convince them that they should have some exposure to gold. The company's mandate or obligation is to be a custodian of shareholders' money and to treat it as if it's their own. I'm a big investor in Evolution as well. And we've got to make a return on that money, irrespective of the gold price. So, the gold price is 2,400 Australian dollars an ounce now. We're making loads of money. It's good. It's a good time to be a gold producer today.
Well, it's a good time to be a gold producer. It's a good time to show your value, I guess, your loyal shareholders, that there is a reason to back Evolution, I guess.
Look, bottom line is, and I'll make this case all day, that, yes, green metals are kind of the rage at the moment, but at Evolution, we're investing your capital, we're making lots of money, more money than those green metals are making at the moment, and we're paying you dividends.
Can't be better than that. And you're very big on sustainability. I know all about this. This is actually one of your core values, isn't it?
It is, Kerry, and it's really important. I mean, it is critical. Yes, we've got to make returns to our shareholders, but we do have two other very important constituencies, and that is the communities in which we operate, and of course our employees. And unless all three of those are looked after, you're not going to have a sustainable company that can prosper through the cycle. So this is really important. It's important from an investor perspective. It's important from our perspective. And frankly, it's just the right thing to do.
You've got here that you're committed to net zero emissions by 2050 and a 30% reduction by 2030. How do you propose to do that, Jake?
So 70% of our emissions are scope 2, and a large majority of that is power off the grid to power our grinding media, our ball mills and sag mills. So in my view, it is really important that we move to a renewable energy source that, from our perspective, would ideally be on the grid. And that's why we think that the transition from coal-fired power to renewable power is really important from an Australian national perspective. And when we can secure that renewable power off the grid, we will be meeting these emission reductions. 30% of our emissions are scope 1, which are largely the trucks and diesel that we're burning in terms of the open pits. A large part of that comes from COWAL. The next generation of trucks, I think, Kerry, will be electric. So in the next decade or so, that will be electric vehicles. And if you're powering them up with renewable power, you should be able to make a massive reduction on your emissions.
Is it a reduction in emissions and an increase in costs, or is it a reduction in costs as well?
I think you should be able to do it at this stage. We're focused on doing it at no impact on our costs.
Okay.
But I think if we do get to efficient renewable power, as an example, one of the things that we're thinking about doing at Mount Rawdon is a pumped hydro scheme, which would be a really great way of closing Mount Rawdon in the next 5 or 7 years. And it could supply a lot of low emission power to the southern part of Queensland, and the Queensland government's really interested in that. So I think Australia really does need to get a move on in terms of emissions. We do have to recognize that it is a global issue, and we need to be part of the global solution.
Always being part of the global solution. So speaking global, you're not just a company, and you mentioned it before, you've got 5 assets here in Australia, but you've got 1 in Canada as well. Should we do Australia first or Canada first? Which one do?
Well, let's do it a global perspective, because you may recall, I've been in this industry now a long time. I'm often described as a veteran, which disturbs me a little bit. But I did spend the early part of my career trying to convince people that they should be buying a gold company in China. We were producing gold in China.
Right.
And it was successful at the time, but things really do seem to have changed, where I think geopolitical risk is rising. I think an assertive China is a new reality which we're dealing with. And the old playbook of Australian capital and mining companies going to emerging developing countries which are resource rich, cheap labor, largely in Africa, I think is an area which is much more fraught with geopolitical challenges today. Given China's assertiveness, China wants to secure its raw material supply. It knows it can't get it from places like Australia and Canada. So it's going to become increasingly competitive. It owns over 20% of the debt in Africa. And this is a long-dated, premeditated strategy that it has been focused on as it seeks to secure its raw material supply. So if you go to Africa today, you're not just going to bump into a Canadian or US company or European company, but you are likely to bump into a highly competitive Chinese company that has cheap access to capital. So in my view, as an investor thinking about geopolitical risk, you want to be in tier 1 jurisdictions. Australia and Canada are those. They have, to me, the 3 absolute attributes that you need to be tier one. They have a rule of law that you can rely on. I go to sleep happily at night with respect to that we will not worrying that we won't own the asset, and I spent plenty of sleepless nights worrying that we may not own the asset in our assets in China when we had them. Right. Secondly, they are very geologically prospective. Undoubtedly, Australia and Canada are God's gift to miners, and they have great high quality and highly skilled people. Those three attributes make Australia and Canada places that we want to mine in. And
it is a lot about the people. So let's get into your growth strategy, because you have these 4 different areas, which we'll start at COWAL, I guess, which is what we spoke about last time I chatted to you about your underground strategy.
So this slide really just introduces our strategy. So let me just briefly cover it off and say that we believe that a concentrated portfolio of 6 to 8 assets is the right number. We don't want to be the biggest gold company in the world. We want to be the highest quality gold company in the world. So that means that we look at everything through improving the quality of our portfolio. And you'll know that we've changed our asset portfolio over time. We've sold assets, we've acquired assets, and we always want to do things that are accretive to shareholders. And there are 4 attributes that we're looking at when we're doing deals. One is, and fundamental to all of this, is there has to be strong geological upside. You need to keep improving the quality of your portfolio, and you want there to be geological upside. That's absolutely fundamental. We will never do something that we don't believe in the geology. Other things that are really beneficial to making something really accretive is it's a deep turnaround opportunity. You'll see at Red Lake and COWAL, we've done that. Synergies are great. At Mungari, we've just done a deal with Northern Star, which has fantastic synergies. And then ideally, you want a motivated seller, and that provides opportunities. So that in a nutshell is our strategy, and that's how we've got to these 4 cornerstone assets: COWAL, Red Lake, Ernest Henry, and Mungari. And I'll talk briefly about each one of them.
Just before we go on, when you say a deep turnaround opportunity, what do you mean by that? Are you saying buy cheap, turn it around and make it more efficient? What's the thinking around that?
Absolutely. The best example I can give of that is Red Lake. Red Lake, for those of you who don't know, was once the mine that made Goldcorp the world's most valuable gold company. Its shares were valued at $60 a share. And that was around in the 2005 to 2015. They were mining this high grade zone at Red Lake. It was 30 to 50 grams a ton. Incredible ore body, 7 million ounces over 250 meter strike length. But they forgot that ultimately the mine would need to go back to being a high tonnage, well capitalized mine with multiple development headings, and they hired 1,100 people. They became fat and lazy and undercapitalized. When we arrived there, there was no development, there was no geology. They hadn't prepared themselves for a future that was going to be 6 to 7 grams, which, by the way, for us is very high grade. They'd got addicted to high grade, and that had made them inefficient. And we have bought cheaply something that we think will be worth billions of dollars. We bought for $375 million US, and it is a huge turnaround opportunity.
Well, let's, as I say, let's get into, let's get into one back here, because we just, and I'm sorry about this, but I look like I'm taking over some of your slides, so I'm going to be moving stuff around a little bit. Let's talk about COWAL, because the last time you and I chatted, this is quite one of your larger ones. The underground development started when?
So we've just committed to that. We're waiting for the final government approvals. Hopefully they can get into their office to sign off on the approvals, but everything's going well over there. We expect to get it in the next few weeks. COWAL, we're ramping it up from about 220,000 ounces a year to 350,000 ounces a year. The underground is going to reduce the all-in cost by 28%. And today, COWAL has a 17-year mine life. And if you talk about transformation, the next slide actually shows it visually, Kerry. If you just flick over to that one.
That one?
Here's an asset that we bought in 2015 with 1.6 million ounces. of reserves. To date, has 4.6 million ounces. It had at the time 3.4 million ounces of resources. Today, it's got just almost 10 million ounces, and we think it will get over 10 million ounces. Its mine life was scheduled to close in 2024. Now it's 2032, and we think it will go to 2040. Plant capacity was 7.2 million tonnes per annum, and now it's 9 million tonnes per annum. And by the way, we've produced 1.4 million ounces. We've generated $1.6 billion of cash flow, and we've totally repaid the original investment, which was 750 million Australian dollars. So yeah, we've got a 7-year mine life ahead of us. That's what I'd call value for shareholders.
All right, well, that is good value. And as you say, you're turning that one around and increasing the mine life, which is really important. Let's go back to Red Lake. We were just talking about that before. This is a transformational asset.
Well, again, this is one we talked about, geological prospectivity. So Red Lake has 11 million ounces, so it's worth the effort. It really is worth the effort and to spend. We've now consolidated the district by buying Battle North, which gives us access to additional mills. It was a mill-constrained operation. Now it's a mine-constrained operation. And we now have the challenge of going from what is really 125,000 ounce a year operation to 350,000 ounces. There's 2 stages to that, and we were very careful when we acquired it in April last year. We said there's a 3-year turnaround, a stage 1 turnaround, which will get us to 200,000 ounces at less than $1,000 an ounce. That's on track. And then stage 2 will get us to 350,000 ounces, and that will be in 5 years' time. We have a mine life in excess of 15 years. The geology suggests that there's way, way more gold that will be discovered over here. And we have the opportunity right in front of us to invest in what is now a mine-constrained operation. And if you flick over to the next slide, you'll see that the real challenge and opportunity, that's the box cut for this new Campbell, Upper Campbell mine. That's going to be another source of ore. We've bought the Bateman mine, that's 10 kilometers away. And we now have 1.5 million tons of processing capacity. This mine, as I said, was really undercapitalized, unloved by Goldcorp, producing 670,000 tons of material. And we now need to build enough mining capacity through really establishing new mines and recapitalizing the lower Red Lake areas to take it up to that 2 million to over 2 million tons per annum. And that will be the 350,000 ounces of production. So this one is one I'm really excited about because it will be a world-class asset. It was once a premier gold mine in Canada, and we will be just restoring it to its rightful place as one in the next few years.
Oh, I think I've gone backwards. Sorry about that.
That's all right.
I'm driving, ladies and gentlemen.
Sometimes in the gold industry, you've got to go backwards to go forwards. Ernest Henry, wow, that was an acquisition that has surprised us on the upside. We definitely had a motivated seller in Glencore over there. Remember, this was at a time when people were concerned about Glencore's debt and their capacity to actually survive as a company. Gold wasn't a core part of their portfolio. It still is not. Yeah. So we did a deal with them that said, well, what if we take 100% of the gold, 30% of the copper, and we'll give you $880 million up front. Suited them, really suited us. People were a bit surprised by the deal that we did. This was in 2016. Last year, Kerry, this economic interest, as we describe it, delivered $300 million of cash to us. It's delivered the full $880 million back to us already. It has reserves out to about 2025, 2026. And Glencore are doing a drilling program now that suggests that it could extend by 3 to 5 years addition. We've been fortunate. It's been, we didn't think that the copper price was necessarily going to be a great thing for Evolution, but it sure has been. And we've got 30% of the copper. That actually goes to 49% of the copper and gold when we get to the 1200 level. But again, it gives you a sense of the way in which Evolution thinks differently about things. An opportunity arose, we grabbed it with both hands.
And it is about finding opportunities, and which is a nice segue into the acquisition of KUNDANA.
It is, and Mangari was one of the assets that we acquired when Naguib Sawiris and La Mancha became a 30% shareholder, and we went through our sort of our first or second stage transformation. I don't know, this is like the waves of COVID. We're on our fourth wave of transformation now. But yeah, it was an asset that we acquired in 2015. It had Frog's Leg, which was a high-grade underground mine, feeding a very efficient mill, this Mangari mill. But the reality was that the Frog's Leg mine was depleting, and right alongside, about 3 to 5 kilometers away, is Northern Star's KUNDANA operations, which has high grade, but it doesn't have a plant. So the geology is the same. It's only just a tenement boundary that has prevented these mines being considered as one system. So when Northern Star did their merger with Saracen, it seemed like an opportune time to go, well, look, this would be better operated as a single mine. Mangari needs access to high grade. You're trucking your material past our mill and taking it 60 kilometers away down to Kanana Bell, which you can actually fill with some other material that you have from the district. So wouldn't it make sense for you to sell us this asset and allow us to consolidate the district? And as you can see, the tenements are really contiguous. It is one geological system. It is a real win for us because there are massive synergies. And we're about to take ownership of it. In fact, we have taken ownership of it. Yeah, it was yesterday that we welcomed 350 new employees to Evolution. And as I said to them, you may not know this, Kerry, but Northern Star have yellow high-vis gear, PPE, and we use orange. So as I welcomed our colleagues yesterday, I said they've now left the yellow team and joined the right team, which is orange.
Love it, love it, love it. We're running out of time, Jake, so we'll just quickly go over these last couple of slides.
Yeah, mine life 9 to 13 years. We're looking at expanding this mine to 200,000 ounces of production. A real opportunity for us, and very happy to be the owners of this Mangari district now.
And it's only just getting better because that just enhances the whole Evolution portfolio, doesn't it?
And that goes, it circles back well to the beginning where I said we want to improve the quality of the portfolio. That's our mission. Continue to improve the quality. You can see on the x-axis is mine life, on the y-axis is margin per ounce. Ernest Henry's stratospheric with respect to margin per ounce. COWAL, Red Lake, and Mangari are real cornerstone assets with between 13 and 20 years of mine life.
All right, Jake, let's wrap this all up for the investors out there that are listening at the moment. And by the way, they're from all over the world. I've been seeing them coming in from, we even got some from Peru the other day. It was quite extraordinary. Why should investors look at Evolution Mining? The portfolio is great. The jurisdictions are good. You are a very good manager of shareholder money. But in your words, why should they invest right now?
17 consecutive dividends, a proven track record of delivering value, a runway of outstanding assets that is core to our strategy. And at the end of the day, what you need great geology combined with great people, and we have both of those.
Jake Klein, Executive Chairman of Evolution Mining. As I said before at the start, ladies and gentlemen, the ASX code is EVN. It's a great portfolio. Thank you so much, Jake.
Thanks, Gary.